have you just have a brief idea and just differences of what was there in 1956 and 2013? So the main difference is, I heard in one of the presentations, the session chairman taking as, the Companies Act is nothing but a cruel and atrocious act. The reason of what I say is known to the people. The guys who have just gone through the act will surely understand the reason why I used to say it's a cruel and atrocious act. The reason being, the consequences and the penalties are so severe that in case if you just get caught, you'll just never see the sun again in your life. So just let me run through the provisions. I just don't want it to be a formal session of a kind of just giving lectures. I'll just walk you through in a just simpler manner so that just people get to know what does section 143 mainly speak about. So I'll just exclude those sections which my co-speaker has just covered. I'll just walk you through in a simple and easier manner. Just before I just get in, I'll just tell you what is auditing. I think IPC students must be knowing what is auditing. That carries, I think, around a 3 marks question in your IPCC. Am I right? If it's a 2 mark or 5 marks question, you just get a question for 3 marks, I think, in auditing, right? Friends, as I told you, I have a small request. You need to be interactive, or else I cannot continue this session. If you don't speak, it will always be a one-way communication. So please speak. Anything is there, just respond. Is it okay? Yes. I'll just start off with an auditing. Just what is auditing? It's a systematic examination of books of accounts, and books of accounts generally comprise of cash flows, balance sheet, profit and loss account, notes to accounts, etc., etc. And what is the reason of why did we do an audit? The reason of audit is to ascertain true and fair view. That is the main reason of the purpose what we do an audit. In case we have been hired as an auditor, what is the benefit what the client gets? It's just an expense to him. Is it right? It's just an expense to him. He hardly pays some X amount to us just for getting the audit done. But the main purpose of doing audit is to ensure whether his books reflect true and fair view of the concern. This is very important because the people who are the stakeholders in the company, they need to know whether the business is doing profitable or whether the things are going on in a systematic way or not. So the purpose of audit is to ensure true and fair view. If that is ensured, the audit is successful. Compliance. This is one of the key areas, compliance. We need to ensure whether the company is paying their taxes and the statutory compliances, legal compliances, whether they're on par or within being met within a due date. If that is not met, we need to report it. So these are the 3 aspects what we do, true and fair view and compliance. This is the broader picture of what audit is being done. I think the people who work are doing their articles are very quite familiar with how things go on. Who is an auditor? Yesterday when I was coming from Hyderabad in a flight to Cochin, so I had one person sitting beside me. So I just told him I'm a CA final student. So he told, okay, you are the people who have done the Satyam scam case. So I felt very offended. So I thought we people should be felt something in a greater professional manner, but rather than being defined and being remembered as a Satyam case or the recent United Spirits case or the EY scandal, etc. So this is something which hurt me really. So I just wanted to tell him, sir, it is not all about what you see. There is something which beyond what we work. So then I just had a word with him, and we were discussing about the auditors, etc. So I just want to tell you because the level of the profession what we are has, due to some of the people, it has been so lowered that I just feel sometimes very bad. But still, I just explained what is an auditor and what we are supposed to do. So I hope he has got the idea finally when I just conveyed him the total content. So auditors, we are the independent accounting firms that are hired by the companies to get the audit. And to be as an auditor, as you know, we need to be a chartered accountant, and chartered accountant is defined under the Chartered Accountants Act 1949. So let me cover just briefly. As I told, I'll just focus on these areas which were not covered by my co-speaker. Section 143. Section 143 is something which is very important because for my IPC friends, I think you must have gone through it in, I think, Company Audit 1, right? If I'm not wrong? Right? Company Audit 1, right? Yes. In Company Audit 1, I think, yes, in Company Audit 1, you'll be covering Section 143, which has got 15 subclauses. And they are not, something 15 seems to be a too big number, but since if you just get through them, it seems to be quite simple. I'll just walk you through in a simple manner, and at the end of the session, I feel that you people will not even think that 15 is such a small number. There should have been something 51. 143, 1. Friends, there's a difference between the word inquire and inquiry. Have you just heard something like this? Inquire and enquire, E and I. Are you just aware of it? You must have, you people just, because generally we just use them in the same, in the same manner, inquiry, etc. But yes, there seems to be a difference. Even I got to just know within a couple of days when I was just preparing for the presentation. Inquiry and enquiry. Inquiry is something, a type of just inquiring and seeking information. And whereas enquiry is something, a kind of a formal conduct. When you go for an investigation, etc., you call it as an inquiry. If there is an inquiry which is put into some cases, what we find in the newspapers, it's an inquiry, it's not an inquire. So inquiry is something seeking the information. So 143, one speaks about seeking of information. So what it speaks about, loans and advances which are made by the company on the basis of securities, whether they're properly secured or not, and the terms are not prejudicial. Loans and advances made by the company are shown as deposits. This is one thing which is important, friends. You need to know. There is a difference between loan and a deposit. Are you just aware of this? Because we might have read this point regularly and we might have thought, yes, this must be a point. But have you just given a thought as to what is the main difference between a loan and deposit and why this point has been highlighted? Have you just given a thought? Any one of you? Any response? Any one of you? I think no. Yes. A loan is something I want. Just think an example. You just gave a loan to one of your friends, and at the time of repayment or to the bank, you take a loan, you pay with an interest. They just ask you, okay, just you have taken for a period of X amount. So they'll just ask you X plus 1 as an interest. But however, in case of a deposit, you just go for a security deposit. When you have been in your schooling, there must have been some computer deposit or some security deposit, etc. During that time, you people generally, you might have paid some amount, but at the time of refund, they would have not been paying you with interest. So since it's only a security deposit, so you need to analyze, are you getting this, friends? Can you just get the difference as to what a loan is and what a deposit is? Are you getting it? Yes. So this is something which, if you just give a thought, you'll just get to know. When a company is giving loan, it will be shown as an, when a company is giving loan, it will be shown as an asset. Even a deposit, it will be shown as an asset. But you need to just think, give a thought as to loan is something when you give, you must be getting with an interest amount. But deposit, no. So company showing loans and advances as deposits is something wrong. And once if you get to a matter as such, that must be, the auditor must have an seek information management as to what went wrong. And personal expenses charge being driven to the account. These 2 points have been covered by my co-speaker, so I just don't want to focus them again. So the opinion of the research committee of ICAI has just specified, unless and until there is something which is negative or which is something important to focus, this is something which need not to be reported. That is what I just read what has been said. The auditor is not required to report on the matters specified in the subsection 1 unless he has any special comments to make on the items referred. If things are all fine, you just need to ignore them. If something is wrong, just inquire and just find out what went wrong. Duty to report. If the auditor is, if you being an auditor, you have been appointed as auditor of an XYZ company, so you are supposed to report on certain matters, on the accounts, whatever you have been done, watching or verification of assets. You just need to give a report, whether they are on compliance, whether on par, whether is there any reconciliation needs to be made. Those are the areas which have to be taken into consideration. And this report will be laid before the AGM. And this report shall be given taking into consideration the provision of this Act, accounting standards and auditing standards. What are the contents of audit report? You need to opt in all the knowledge opt in all the information and explanation which is best of his knowledge and belief were necessary for the purpose of audit. In case of any information is not received from the auditor, in company audit 1, I think SA 705 speaks, 706 I believe, which speaks about a modified opinion. Am I right? 706 or 705? 705? Okay. 705 speaks about the modified opinion. If things are in fine, I think if that is the case, you are not getting the information relating certain items where you feel that company might have something there seems to be some like deflection or some mismanagement. So if the management denies the information, those are the areas which have to supposed to include in your audit report. If the books of accounts are not maintained as per the statute, even those matters have to be reported, since statutory compliance is one of the basic terms, as I've discussed in the first slide of auditing. Whether financial statements have been prepared in compliance with the accounting standards, I think this you must have read when you're. How many of you read Companies Act 1956? Can you just raise your hands? 1956? Hardly few? Yes, good. In 1956, I think you must have read a point in Company Audit 1, 2113C. How many of you remember something like 2113C? Anyone remember? 2113C of the Companies Act. Financial statements have to be prepared in compliance with the 2113C of the Act relating to accounting standards and auditing standards, etc., etc. So that is the point which has been taken here in 143. Disqualifications of auditor. This is one of the very important auditors where I would like to spend a couple of minutes, because this has got some significance. Earlier, when the directors have been disqualified, there was a provision stating if you have been convicted for a period of 6 months, then for the period not ending less than 5 years, you will not be eligible to become a director. But in the Companies Act 2013, the provisions have been made so severe that a person, I'll just read the section, I'll just read the phrase what it says. A person convicted for an offense and sentenced to imprisonment of 7 years or more cannot be appointed as a director in any company, even in case after 5 years of completion of such imprisonment. Friends, this is something like mainly focusing on those people who have a criminal record, and if they still want to become the directors, I think the Companies Act is very strict on them not allowing to become the directors. I think this is one of the good point which has been keenly focused, because in the last 5 years we have seen many people with a criminal record becoming the directors of some of the blue chip companies, etc., etc., and things going on. So earlier, under section 274(1)(g), the disqualification was a bit lenient for the directors. Even he was imprisonment of a period of 6 months, he can just become a director after completion of 5 years. But in the Companies Act in 2013, if you have been in prison for a period of 7 years, you will never become a director of any company, even after completing 5 years. One more point to be noted in disqualification was, earlier it was only for private companies, but right now it also includes, it was only for public companies. Right now the word private has been removed, it has been replaced with companies. So as everyone of our know, company includes private and public, right? Companies include private and public, right? Am I right? Yes. Just correct me in case if I'm just going wrong, because even I'm a human, so I just make mistakes. Now coming to whether the company has adequate internal financial control system in place and operating effectiveness of such control. This point was covered by actually my co-speaker, but I just want to elaborate much deeper into this. Since the reason being internal financial controls, have anyone just heard this term, internal financial controls? Have just anyone has just got an idea about this? Just raise your hand. Has anyone got an idea? Yeah, I think no. I'll just explain. Internal financial controls, this seems to be earlier under Companies Act 1956, there was a provision that the board of, that the CEO and CFO, they were supposed to report in the board of directors report stating that the company has complied with the internal financial controls and there seems to be operating efficiency. But with the implementation of this internal financial controls, it became much severe, stating that even the board of directors are supposed to report and review and report, stating that the financial controls are operating effectively. So I just doubt as to how can this be done, because this seems to be something I would like our session chairman to just discuss on this issue of internal financial controls on being implemented, because there was a guidance note which has come. I think there's a guidance note which was given by ICAI on internal financial controls implementation, but later on it was withdrawn due to some reasons. So this being something, it was mainly adopted from COSO. COSO is, which is followed mainly in the Western countries, Committee of Sponsoring Organization for Trade Commission, and there are certain points which are taken even from SOX Act. I think some of my final friends will be having an idea of SOX, Sarbanes-Oxley Act. So those were some of the areas from where they have taken provisions for these internal financial controls and reporting. So from the auditor's point of view, yes, there was a point stating that the auditor has to report on the internal financial controls for the year of when the act was implemented in 2013, August 29th. So, but later on we got a notification stating that it will be applicable only for the financial year 14-15, and later on it was still ratified to 2016. So I would like to, I have a small request to the session chairman to just elaborate on this issue. Friends, this is something beyond how things are going on, because we feel that Companies Act has come into the act, but there seems to be a lot of confusion happening in and around, and why the act is not being taken into consideration. So next, company compliance. So investors protection and education fund is something we must have read during the dividend paid. When the dividend has been paid and it has not been claimed, for a period of 7 years it has to be transferred to IPF. So there's a small clarification which has been made in the Companies Act 2013, which just needs to be taken care. And this is something which my friend has covered. If there is any regulation observation negative, that has to be reported. And coming to the government companies, C&AG has been doing a very excellent job, because what we found out was they have been coming out with a very fabulous and marvelous reports on the recent scams which are happening, with the good financial numbers and digging into the reasons as to how things have gone wrong. So it is relating to, in case of C&AG appoints an auditor, how things have to be taken care, and what is the procedure and the manners how it has to be taken care. So it mainly speaks about, in case if you are be appointed as an auditor of C&AG, you are supposed to follow the procedures as recommended by C&AG, and the report prepared by you has to be submitted within a period of 60 days. And those 60 days includes 45 days you need to send initially to the company, and if the company doesn't reply to you, you need to send the same comments to the central government indicating the deficiencies, and the same shall be put to the members in the company's general meeting. And 143.8 is something which my friend has covered relating to branch audit. If the branch is not being audited, if it's an Indian company and the branch auditor has to send his report, if it's being audited by some other person having branch outside the country, then such a branch auditor must be qualified as per the provisions of that country, and that report has to be sent to the company auditor. 143.9 speaks about we need to comply with the accounting standards and auditing standards as given by ICAI, and guidance notes are something which I feel it's a very good thing, because I have just gone through one of the guidance notes given by ICAI on one of the standards, where they clearly mention, though it being quite complicated, some 250 pages book, but still it gives you ample knowledge as to how things have to be carried out in case if there's no clarity. I think many of you must have heard about NAFRA. Has anyone got an idea of NAFRA? This NACAS and National Financial Reporting Authority. So the auditor should forward his report to the board and audit committee within 45 days. And if on the receipt of such board, he'll be granted 15 days, which has to send to the central government. But there seems to be some kind of you can say it as a miscommunication or a small gap here. As per the act, it says it's applicable only to the listed companies with specified threshold limits. But as per the Companies Act rules, it says it's applicable to all the companies. So I have been in one of the members' conference where our Vice Chairman of Board of Studies, Nilesh Vikamse sir, he has been explaining us about things how were going on beyond the book, which many of us are not aware. Since lack of time, I cannot share you what was the main content of the such, but the point was such, in the MCA the things are going on that a specified threshold limit has to be identified as to what type of frauds have to be reported to the central government and what have to be reported to the audit committee. And even in the Companies Act 2014 bill, I think that point has been included. So code of conduct is something, friends, again, if there is a fraud